It's important to be comfortable with what you're doing. It's important when you're investing to not only make money, but be able to sleep at night. So you put your money somewhere, you see cash flow coming in every month or every quarter. The returns are quite good. And even in the event of a crash, you're not going to be able to panic sell. And you're kind of going to be forced to ride through it and then take part in the recovery. So I started about 3.5 years ago, researching how to set about to start this company and provide the service. We did our first raise about 3 years ago. We started raising for about 3 years ago, and we completed it, and the property was closed on in February of 2017. And since then, we've done about $4 million in equity over 12, 13 deals.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke, and today we have Dovid Preil. Dovid is a real estate investor, syndicator, and founder of YDLP Investments out in Israel. Dovid, thank you so much for joining us on the show. And how are you doing, my friend?
Thank God. Well.
Yeah, I apologize for getting the first name wrong there. But I really appreciate you taking the time, especially all the way from Israel. First time talking to an international syndicator investor. So I'd love to look forward to kind of talking more about, foreign investments and the type of activity that you guys are working on. But before we kick things off, if you don't mind kind of talking about your background and how you got started in real estate.
Yeah, so I started I look at real estate as another financial vehicle, another way to invest, another opportunity. I started 11, 12 years ago. I guess it was really almost 12 years ago at this point, during the depth of the last crash back in 2008, 2009. I was sitting on some money and I was just thinking to myself, like, this is probably a really, really great time to start investing. So back in January 2009, I started putting some money into the market, and the market hit rock bottom back in March 2009. So I started making a lot of money after that, and I thought I was a genius, and I wasn't. And I ended up making some money, ended up losing some money, and I went through a whole process there. And that was really my first experience doing anything active in the world of investing. And I kept that up, and I'm still doing some stuff in the stock market. Years later, I started working in the real estate here in Israel on the debt side as a mortgage broker for residential properties. And as I saw more and more people who were here in Israel who had access to money, who didn't have what to do with it, the real estate financing in Israel is a mess. The cost of living here is very, very high. The cost of apartments, I should say, is very, very high. And I believe in statistics, this may be a bit dated, but in the U.S., it costs about 2 to 3 years of salary to buy an average house. In Israel, it costs about 12 to 13 years of average salary to buy an average apartment, which is what people typically buy here. Additionally, financing is pretty tight. You can only get 70% financing. You can't finance your closing costs. So you could be sitting on a few $100,000 and not be able to buy a place to live. So having seen that firsthand, I set about to provide some sort of financial opportunity for these people. And I kind of gravitated towards U.S. real estate because it's a lot more stable in the stock market. A lot of these people are not necessarily the most sophisticated investors. And the biggest risk in something like the stock market is that, you have control of it. It's liquid, and then the market crashes and you sell out. And you end up buying at a high, selling at a low. Real estate it's got a nice stable cash flow, so you feel good about it from the beginning. It has a certain, and I'm not saying it feels good just in in some sort of superficial way. It's important to be comfortable with what you're doing. It's important when you're investing to not only make money, but be able to sleep at night. So you put your money somewhere, you see cash flow coming in every month or every quarter. The returns are quite good. And even in the event of a crash, you're not going to be able to panic sell. And you're kind of going to be forced to ride through it and then take part in the recovery. So I started about 3.5 years ago, researching how to start this company and provide the service. We did our first raise about 3 years ago. We started raising for about 3 years ago, and we completed it, and the property was closed on in February of 2017. And since then, we've done about $4 million in equity, over 12, 13 deals.
Wow. So what is your process of, I understand that you said you're gonna, there's untapped potential with, capital sitting in Israel, and you're looking at U.S. real estate. What was kind of your first step to establish? Was it, working with a sponsor that you worked with, or did you establish it directly, a deal? What was the process and steps that you took?
Right, it's a great question. I started just reaching out to my network, talking to some people who were more in the financial real estate side of things. And I had a little bit of a hurdle to overcome, because you talk to people about doing real estate investments and everybody wants to everyone starts thinking, in terms of millions of dollars. And my prerogative here is really, if you see any of my stuff on LinkedIn, I'm very focused on helping people get started in this, people who have, 10, 20 or $50,000 to invest, or people who can invest at those increments. I want to help people. I want to help a guy with $300,000 invest at over 6 deals at 50,000 a shot, so they can diversify their income. So I had to talk to the right people, get people who understood that model, and through the course of that, I found a partner who the idea, the mission resonated with him. And this is a fellow who at that point he had been an underwriter for 12 years. At this point, it's been 14 years. He's underwritten over $200 million in commercial purchases. And we started working together. At that stage, it was more his connections to the sponsors that gave us access to the deals. Again, we were talking about smaller money. So we had to work with people who are doing quality deals, who are willing to work with us and take our investors at a smaller level. So we have a small group of sponsors we work with by design. We have about 5 sponsors we work with right now. And that's kind of who we've been working with these last 2-3 years. And we've been putting in, a few $100,000 into each of their deals, as we see fit, not all of their deals. And we're just building off that network. I think at this point, we're researching, we're looking into 1 or 2 new sponsors to see if we want to take them on. But we're very careful with that.
All right, and then as far as kind of like the asset classes, is it multifamily or different types of assets?
Well, again, our whole ethos is we want people to diversify, and by diversify, I mean both in terms of asset types, geographically. There are many risk factors out there, and many of them affect very specific sectors or areas. So what we like to do is help provide people with diversified streams of income, multiple streams of income. So we work with different sponsors who have different expertise. We have one spot. So we've done of these deals, we've done basically every major type of commercial, industrial, retail, and office, and we also do multifamily. We did in the beginning. We did a little bit of residential development, but those deals are harder, and there's more risk involved in them. More things that could go wrong, and we've seen it's already starting about 2 years ago. We started doing exclusively these more larger, stable deals, cash flow from day one. Usually there's some sort of upside potential, something nice happening in it, either a great purchase price or some sort of value add component. So we're hitting some nice IRRs. And so far we've done deals in 5 states, and I'm just in the middle of launching tonight. We're in Israel, so it's nighttime here already. We're in the middle of launching a deal. It would be in our 6th state.
Wow, beautiful. And how was your process for educating investors? I know, people in Israel, they said investing in the United States is a huge opportunity, but it's like so much states, so much different opportunities. Looking at the numbers, it's like totally different, because you mentioned looking at a mortgage deal, resident takes long time. It's just like a different world,
Yeah.
So how do you educate your investors to get them comfortable, and then when you present them opportunities for them to take action and consider it as an investment?
That's a good one. So for starters, I try to post a lot of content out there. I try to give people a lot of information. I have a course that I launched about a year ago that I'm in the middle of revamping now for 2020. I'm going to be adding some sections updating some information in light of what's been going on in the last year and a half in the market. So I kind of put that out there. I've done webinars in the past. I do plan on doing more of those. But really when I sit with somebody and I go through a deal with somebody, I kind of lay out in the first minute of the conversation that if I say anything, I use any phrase or any letter combination that is unfamiliar to you, you have to stop me on the spot and make me explain it. If you don't understand it, you have to tell me so I can explain it to you again. That's my only precondition on any conversation, because I want the person I'm talking to understand what's going on, at least to the best of their ability. And it's not good for anybody if you talk for half an hour and at the end of the conversation they have very vague ideas of what's actually happening. Mm-hmm. So I just position myself in a very open place to allow people to reach out, ask questions, and gain whatever clarity they need to have in order to feel comfortable.
Awesome. And then what is about as far as the process of an investor investing in U.S. Capital? Like I know there's legal paperwork and things of that sort and limited liability. Can you kind of explain it from an investor from Israel? Or maybe it's the same from other countries, but specifically from Israel to U.S. based real estate.
So in terms of the legal structuring, in terms of the LLCs and all of that, it can be done very similarly. The real two issues that need to be taken into account always are the regulatory concerns and the tax concerns. So from a regulatory standpoint, you really need to be concerned about both about the country that the rules of the country that you're investing in and the rules of the country that you're taking the money from. Typically, I really only work at this point with Israel and the U.S. I've done a little research to Canada and in the U.K., and now I have my securities lawyer. You should definitely have a securities lawyer on speed dial. That's important to have such a person available to you. Right now, my securities lawyer is in the middle of researching Australia for me. But typically what I've seen, and again, I'm not giving advice here, is that typically the securities law is defined by the country in which you are raising from. But that's just what it happens to be. Like, for example, in the U.S., in U.S. securities code, they define a U.S. person as based on residency. So you have a U.S. citizen who's living abroad, they wouldn't be subject to the U.S. regulations, and therefore you wouldn't necessarily need them, at least from the U.S. side, to be an accredited investor in order for them to come into a deal. That would require otherwise accredited investors. A 506c offering, for example, you can take U.S. citizens who are living in Israel per se. Now, you still have to comply with the Israeli securities law. So Israeli securities law has its pluses and minuses. Just as an example, Israeli securities law states that you're allowed to raise money from non-accredited investors on a non-registered security, meaning, let's say, a real estate offering. But you're limited to you cannot offer the opportunity to more than 35 people. Now, the key word there is offer. So if I were to go ahead and post a deal on my website or on an email blast, I'd be in a violation of this regulation. And the Israeli Securities Authority has come after people for less than this in the last few years. They've really cracked down on this. So I have to be very careful not to offer it to more than 35 people. In contradistinction, in the U.S., it's not really a parallel regulation, but in a 506b offering, you're allowed to take on 35 non-accredited investors. But there, it's not based on, you can offer to as many as you want. So you can do a webinar and offer it to 300 people, and the first 35 who sign on can come in.
Right.
I can't do that here. You have to really balance all the different sides and all the different regulations in order to make sure you're compliant. I can't even post deals after I've done the deal, meaning it's technically speaking a violation of securities law in the Israel side to promote a deal or to offer a deal even after the offering is closed. So I can't even post numbers on my website showing what we've done because that would qualify as an offering. It's a bit frustrating, but you gotta play by the rules, especially when they're very strict here. On the tax side is also a tricky game you have to play. One of the major concerns, and this is an issue for anyone investing abroad in the U.S., and I'm not up to speed on this because it hasn't been relevant to any of my particular investors lately, but there are death tax ramifications different from U.S. investors and non-U.S. investors that if anyone is investing from abroad, they need to be aware of that, because if someone should pass away during the life of the deal, they can be taxed at a much higher rate as a non-U.S. citizen. So that's a concern that has to be taken into account. And talking to different accountants and different tax advisors, there may or may not be resolutions to this, but that's an issue which is out there. Aside from that, the taxation in the U.S. is the same for U.S. investors and non-U.S. investors, but there is tax withholding, for example. So that becomes almost a marketing problem, because let's say you have a deal which is paying out, let's just use nice round numbers, 10% a year, cash on cash. So to your U.S. citizens who have a social security number, you can give them out 2.5% every quarter, and you're good. But for your non-U.S. citizens, you have to make sure you do withholding. So that costs a little bit of money. It's not a big deal. But depending on the size, at the level I'm working at, where I take $10,000 even from some people, that becomes not viable, because I have to pay, let's say, even just $200 a year for withholding to my accountant. That's 2% of the profit right there. So that's where it affects me. But what affects everybody is when you're trying to market this deal, withholding on that money is about 39%. So this investor, instead of seeing 10% in the first year, they're going to be seeing 6.1% in the first year. And then depending on their income level, they're going to see a lot of it come back in a tax refund the next year. So what do you do about that? So this is an interesting question in terms of how you market the deal. So what I've told people is I basically say, the first year the return's a little bit lower, and then by the second year the returns are on par with everybody else, because you're getting your makeup from year one and you're getting whatever you're getting in year two plus the withholding. And then by the end, after the deal ends, you get back the rest of it. I've heard other people say they basically sell it as like a bonus quarter. So you get like 4 quarters, and then you get like your bonus quarter, the 5th quarter at the beginning of the next year. And then obviously there's also concerns of how things are taxed locally. So you need to know how to look, not any, but what I've seen with my Israeli investors is they're always comparing the U.S. investments to what they can do in Israel, because people are just more comfortable investing locally. So if they know it's their market, and a lot of them grew up here, and it's just familiar. So they're constantly comparing what they could do locally versus what they would do if they sent their money abroad. So a major component of that also is how it's taxed. Is the money taxed? If the money is invested abroad, is it taxed the same way as if the money is earned locally? So that's something else you have to be aware of and be on top of.
Yeah, that's the biggest thing. Cause I speak to a lot of Canadian investors, and I don't know the answers to it as far as the tax implications, because you was talking about kind of what is the net after, the tax implications. So that's something that's definitely, concerned, and they do the comparison, what they can do locally where they won't have to endure all that type of investment. But as far as like a comparison from Israel to US based real estate, I mean, is it pretty relative? Is it come down to just, more attractive options, or is it, really numbers are more attractive here compared to there, that, you see a majority of people will consider the US based to take that risk,
Yeah, so the Israeli market, if you're asking about the Israeli market vis-a-vis the US market, the market here is it's cap rates in places like Jerusalem and Tel Aviv are like 3%. You're looking at, and on an investment property, your financing is not going to exceed 50%, and typically your amortization will be between 12 and 20 years. It's very hard to make good returns on investments here. It's just the nature of how this country has been structured and how they do real estate here. The prices are very stable. There's a major shortage of housing here, and the way development works, it's very centrally controlled. So there's always a shortage of housing. Even during the global crash in 2008, the prices of housing here didn't fall by much, because it's just such a shortage and there are just so many people. And the problems are systemic. It's because the government needs to release land. There was an article years ago in one of the major financial publications here where they interviewed one of the largest developers in the country, and they asked him about why it takes so long to develop anything. And they asked him, do you think there's a problem with some people coming up the system by trying to throw in bribes? And that throws it off. He's like, bribes? He says, I wish I could bribe people to make it happen faster. It just takes forever to rezone land, get approvals, and do construction. So there's a stability here. But the cost of that is that the returns are much, much lower. Most people who are doing real estate here, the developers are making good money, but most people who I know who invest here, they invest in very specific projects that are tax optimized. It's basically earthquake retrofitting, and people are giving on that anywhere between 12 and 14% a year in debt offerings, basically. So you can definitely do just as well as that abroad. And by the way, I probably should have mentioned this in the previous question. One very important caveat to all the tax ramifications in America is you can avoid all of it if you lend money to a deal, if you come in on the debt side. The only trigger tax reporting requirements is if you're generating money by owning an asset in the U.S. If you as a foreigner just lend money to this, at least this is the guidance that I've received and that I operate under. Obviously, I'm not a CPA, and everyone should confirm with their own people. But the guidance that I've received is if you're lending money as a foreign entity into the U.S., so then there's no reporting requirement in the U.S. So that's one way, depending on the deals you're looking at, to avoid all those issues.
Very interesting. All right, yeah, we appreciate that. And also, to adding to your point, is like, on the regulatory side, you had mentioned like, more government control, depending here with more states, because a lot of the syndicators operate in more landlord friendly states, less regulatory stuff, so they're able to kind of control their destiny there and do value add projects, so they can kind of squeeze out profits from there. So that's awesome to hear that. As far as kind of like the sponsors that your group works with, what's kind of like your screening process? I mean, obviously they know, like, and trust you and your judgment and your expertise in there, but what's your process of then screening those investors to make sure they're suitable for your investors?
Right. So our sponsor base is mostly connections that we already have, that we know from the real estate space for many years. One of them is my partner's own company. He's been there for 12 years. He's working with it's all family over there, and they've been doing this the company's been operational for about 110 years. The people that are there today have been there for decades. We have a couple other companies that we work with through personal connections of people who we know, and they're in real estate and they have very strong track records, decades of experience. There's only one partner to date we've really taken on that we didn't know in advance. And what we did for that was we basically looked at he'd been active for about 10, he's a second generation guy. He'd been active for about 10 years. He had partners who were active for 15 and 20 years. So we basically pulled all of his past deals and we went through them all. He's active in sectors that we're very familiar with. My partner even recognized some deals from when they were on the market originally. And we were able to tell from just reviewing literally all of his deals that he was operating on a very high level. Even then, he sent us a couple of deals before we went in with him, and then we just went into one deal and we saw it was working well and he's paying out nicely, and then we continued to work with him. So it was a long process. But we feel, because of the clientele we're working with, there's a lot of trust and faith placed in us, and that kind of it obligates us to just do more due diligence and make sure that we're being extra careful with our investors' money. There's certain deals people have brought to me that I said, if I had the extra $50,000 sitting in the bank, I would put it with you and give it a shot. But that's not a chance. That's not a risk I could take with other people's money.
Mm-hmm.
So that's where we've come to today. And thank God, most of our deals are doing quite nicely.
Very nice. And as far as I know, you guys, built a nice track record. You guys doing, some very good projects. What's been real good help for you to kind of build your investor database? Has it been referrals, or are you guys doing, interviews like this? Or I know you're doing educational material, but how are you guys able to expand your networking, investor network base?
That's a good question. It's been it's kind of like all the above. And I feel like I'm still trying to get my feet in that, to really find my grounding in that. There's been a lot I've made decent money on LinkedIn, just putting stuff out there, building connections over there. It's been networking, it's been some advertising, it's been the educational stuff, it's been building my newsletter, building my WhatsApp group. I can't say I've found like the silver bullet that this is what I've tried taking on different associates and talking to people and Some people, they refer people to us. It's really, it's all of the above, every deal. I thought it was about a year and a half ago. It was April in 2018. We kind of refocused. At that point, earlier we were just getting involved in too many other projects and too many other exciting opportunities. We said we're just going to refocus and just focus on this core operation that we're talking about today. And at that point, I set up, we finally determined what KPIs we should be looking at. And that KPI was how many new investors, how many new people are reaching out to us when we offer a deal, and how many new investors, first-time investors, do we have going into a deal. And last summer, we did 3 raises. And each raise we had, they were decent raises. We 2 of the raises, we hit our targets. 1 of the raises, we didn't hit our target, but that was for external reasons. But we didn't have any new investors. It was all the same old money being recycled, the same old people coming in again and again. I said, this isn't working. So by August time, I took a break from raising money. I spent a lot of time refocusing on how I was going to be marketing. That's when I did my course. That's when I started really developing content in a much more thorough way. And we launched our next deal in December of 2018. We had a few new investors, and then every raise we did over the course of 2019, we've had new investors, more new investors. And even just tonight, I just sent out an hour ago a notification about this new deal we're raising for, and I've already had a few people who I've never heard from before reaching out to me with interest. So we're keeping a very close eye on that. And it's just really, in terms of where we get it from, at this point is all of the above. I would love if I could figure out that like silver bullet of how to do it, but it's a lot of trial and error and a lot of just, putting yourself out there and trying to build that trust.
And as far as Israel, are they kind of have laws similar to the U.S. as far as I know you mentioned before as far as what you can and really can't do. What about kind of getting more information out there, like on social media? I know they have like LinkedIn. Is a Israel side, or is it more people can find it because it's on the World Wide Web, or is there like local meetups, real estate investor trainings that they allow there as well, or is it more prominent there?
You could do that. I haven't done it yet. It's just only so many hours in the day. There is stuff like that goes on here. There are some real estate investor clubs. It's definitely not as widespread as it is in the U.S. The mentality here is different than the U.S. People here are it's a tighter country. It's not in the U.S. It's people have a very strong growth mentality. They feel like I can't have more, and I'll make money, and I'll invest money, and I'll borrow against my house, and I'll invest that money, and it's a very strong growth mentality that's pretty widespread in the U.S. In Israel, it's taxes are tighter, and there's a way of doing things, and to try to break people out of that mold and explain like, no, there are better opportunities that you can have access to. It's a process. So to just open up an investor club, it wouldn't have the same draw as in the U.S. But in terms of reaching out to people, it's right now I'm experimenting with a different form of advertising, something that would never work in the U.S., but it's something which is very localized to a very specific clientele in Israel, and I've been seeing good traction so far. I was doing it I was posting signs in public locations for a while. I was getting 2-3 calls a week from that, which I was using a small area base. The whole base was an area of about 700 families, so it wasn't a very large base to begin with. I'm starting tomorrow to send that out in a paid forum, and then I'll expand it from there. But it's a lot of trial and error to see what message resonates and sticks with people who a lot of these people haven't really even thought about investing before. So you're it's almost like bringing a new product to market that no one's thought of before.
That's very interesting. Yeah. Hopefully it does well. I can expect, because you guys have a big track record, and like I said, just working on a lot of projects. It just really comes down to people just being aware that the opportunity exists, and of course, tend to get some type of friction when there's something that seems new. But again, like I said, when you compare it to what's available locally compared to stuff abroad, is just in certain cases it's like more advantageous for them to at least consider that. So definitely want to track how that goes, and love to hear more about it, because like I said, I always get a lot of inquiries from a lot of international investors. So I was always curious on how that works. I'm glad you was able to break that down for us. Can you kind of talk about maybe what's your typical work day, and do you have any special morning routines?
Yes, I'll start with the morning routines. I'm an Orthodox Jew, so my morning routine after I get my kids out is we pray for 45 minutes to an hour. That's when it's done right. It's not always the easiest to do it right, but when it's done right, it really sets your day up properly. Typically, I'll engage in some sort of religious studies for an hour or two after that. So I have a very spiritual morning.
Mm-hmm.
And then I work quite long hours actually. In addition to this, I also have a salary job, working in a fintech company, which is really quite interesting. So I break the day down between the two of them, and I'll work. Some nights I work until 12, 1 o'clock in the morning. Some nights I stop at 9, 10 o'clock, and I just have my list of things to do. I have my long-term goals, my short-term goals, and I have my task manager, and I have my time blocking, and I try to get everything in there. But,
Beautiful. Yeah, like I said, it's always, like I said, 24 hours out of the day, but it seems like it's when you're working, you have kids, you have family, you have this and that. It just kind of adds up, and it's like, where does the time go? So
yeah, 24 hours there's not 24 hours in a day.
Yeah,
that's a myth.
Yeah, no. Well, you can say with your success, like I said, that the investing in U.S. from Israel is just like very interesting and exciting. I love hearing about it. What you can say that you're most grateful for?
That's a tough one. There's a lot of things. I'm grateful for where I am in life. I'm grateful for my family, for my wife, for my kids, for being able to live where I live, to be able to do what I do, to be able to help the people that I help. I've been given a lot of gifts, and I just hope that I can turn those around and make something of them.
Mm-hmm. Awesome. Yeah, like I said, very well said. It just like to speak with you, just very laid back and easy to talk to, and you give a lot of information. You seem like you're like to help out a lot. Like I said, just doing this call, I know it's going to help a lot of potential investors that's listening that may be interested, or just giving them the extra edge they need to make things work out a little bit better in their investment endeavors. So I really appreciate you sharing that. So how do we get in contact with you? I know that you have a website. We'll make sure to put this on the show notes. Maybe some information you can share with us so we can get in contact with you.
Yeah, so the website, YDLP Investments, there's a contact form there. There's an email list, sign up there. I'm very active on LinkedIn. I've tried getting some traction on Facebook and Bigger Pockets, but I haven't had the time to put into doing those right. So I'm still primarily on LinkedIn at this point. And I'm on WhatsApp. I have an Israeli number that connects to WhatsApp, so reach me on there as well.
Perfect. And then that you have a course that's from the website. You can get access to that as well.
Yes, on the website I have links to a webinar I did and to the course. The course is in the middle of being relaunched. Probably by the time this goes live, it probably will hopefully be relaunched. I've already started recording the new sections, and I am looking to start doing more webinars on a more regular basis as well.
Yeah, I think like I said, just getting more information out there for people can kind of just know what the opportunities are, and especially how you kind of broke down like the process, which I wasn't familiar with, especially from Israel specifically. And again, it's just so much things and so much opportunities that's out there. So I really appreciate you sharing that. Dovid, thank you so much again for taking the time. Here in the States, we're coming up on a holiday season. I don't know what holidays over there, but again, have a good end of this year for you. Continued success, and we'll look forward to connect you again soon.
Thank you to you as well.
All right, take care, my friend.
Enjoy your time off.
Absolutely. Well, I always work. I have two young kids. I'm always up doing something. So
there you go.
Full job there.
Okay,
but I'm
enjoy.
Blessed.
So this is your opportunity to enjoy them.
Exactly. Absolutely. All right, my friend. All right, have a great week, and take care.
You too.
All right, bye-bye.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.